blame yourself. Shit happens. We haven't been talking to anyone else.
What's up guys, Steven Duxer. So first of all, thank you very much for coming to the conference, and hopefully you guys learn something new and benefit your trading career in the future. So today we're going to talk about a lot of stocks been happening for the last 3 months. So I have a list of tickers could help beginners to really start their statistics tracking, and we'll be giving out a template and a list of tickers you can track, so you can go in and find out the flow, the cap, and also the trend as well. And to make a conclusion or make a brand new strategy for yourself. And make sure to click the link below in descriptions. Once you guys are in our email list, and we'll be sending out the list of tickers and the template for you to track for statistics. So today's main topic, we'll be talking about how the overall market will affect the stocks that we're trading right now. And I know there's not much correlations between the overall market and the micro stocks and penny stocks that we're trading. The only correlations that we have is when the market receives large volatility and it's bouncing at 11% overall market or dropping 10%, and that will affect how the coronavirus is behaving in the very short term. So I'm going to give you a few examples, and you can also use these type of examples to make decisions based on the market volatility. Let's get into the examples. So right here, we'll be giving a couple examples for you guys, and it's not all of the tickers that have been happening for the last 3 months, and we received at least a couple hundred tickers that spiked over 50%, that's qualify our criteria. So I don't really have enough time to go through hundreds of tickers. I selected those tickers that stand out the last week, and I will be giving analysis on it, and also make sure to listen closely because different tickers happens in different time zones and how to really react based on different time zones, and also the overall market. So let's get into the first ticker. CODX is one of the most popular tickers I've been trading for the last 2 months. And you can see the market volatility can affect stocks can drop and spike at the same time. When the overall market drops about 10% or 12%, there will be a massive spike for this type of coronavirus stocks. And when the market starts to become stable and without dropping, or it starts to reverse and come back, and all those coronavirus stocks decides to go down because people are thinking, oh, the market is recovering, maybe the coronavirus stocks are dead. So they're selling their shares, and you can see the stock went from $20 to $5. When you are looking at overall market volatility, and when the market is dropping huge based on these type of coronavirus stocks, you are expecting huge spikers right at the open. Now, the first of all, when you are seeing a fresh ticker is healthcare stocks, do not think about shorting. And if they didn't really spike enough and the stock has a low flow, low cap, good news and potential multi-day breakout, yes, it's a potential long. Now, when you're looking at a stock that formed a huge amount of resistance from March or April or February, this is where it gets a little bit tricky because at the first wave, a lot of people get excited and they're thinking the healthcare stocks is going to skyrocket. And once they buy, all of a sudden they know, well, microcap stocks fundamental are completely trash. And long term, they drop where they came from. So this ticker went from 4 to 20 and went down from 20 to 5. Overall, the first wave trapped enough people who are buying the stock. Now, every single bounce are not very significant compared to the first wave. Normally, the first hype has the highest volume and most backorders. So the next couple waves will cause a couple chain reactions. Now, stock will keep going up based on the market volatility, but it cannot be the first wave of backorders because when the stock decides to spike, they want to sell their shares and the stock goes down. So in this case, when you're looking at tickers already spiked 2 months ago, then do not try to go long because that's a bad decision and also a bad idea. It doesn't really give you a really good odds. Now let's look at BMRA. BMRA is very different compared to CODX. You can see without any type of historical trading or high volume, the stock went from 1 to almost 24. CODX, once they traded before, now onto this green day, went from maybe 5 to 13 and dropped from 16 to 9. And it doesn't really have the potential of spiking thousands of percent compared to BMRA without resistance. So in this case, going long without resistance based on market volatility. If the market volatility is dropping and there's a huge coronavirus fear, focus on the stock that doesn't really have historical resistance. You can focus the stock without historical resistance, so you can take advantage, try to go into the long side instead of short. Now, when you are looking at stock with resistance, and the resistance is already formed, the back row is already there, and you're trying to go long, then you're basically buying into resistance, buying into the first wave of people that already got trapped, which doesn't seem like has good odds. So overall, CODX and BMRA, those are two signature charts that happened for the last 2 weeks. Now, the market recently are fairly stable. They're not dropping 5% every single day. Once it starts to stabilize, doesn't really have to go up or go down. Once it doesn't give you that large volatility going up or down that much, then the market will start to fall back to normal. And all of the statistics will go back to the same. So the next thing I want to talk about will be volume. Volume is very important indicators for you to select if you want to go long or short. As I said, the first wave that formed enough resistance is not ideal for a long strategy. Without historical resistance for healthcare stocks on a large volatility for the market on that day, then it will be a potential long based on the float, the cap, and the news. Now let's look at in terms of volume. So volume, what we typically get back in 2019 and 2018 is around 40 million and 50 million. That's considered very crowded. Right now we're experiencing 70 million to 100 million traded on intraday, and it's considered crowded. So the volume itself increased about 30 to 35%. So overall, when you look at the chart intraday, let's give example BMRA. So it's trading about 32 million volume for $3 million stock. Now, in the same market condition back in 2019, 2018, it's considered crowded. If you're moving to right now into 2020, that everything is running very high based on very high volume. 32 million is not that heavy resistance, or it's not that much volume in intraday. Now, this is something you have to keep in mind. When you are shorting into resistance, you want to short into as heavy volume as possible. And BMRA 32 million is considered heavy volume back in 2019. It's not very considered a heavy volume in 2020. So this is considered as a medium resistance right now. When you are trying to use your shorting strategies, always adapt into the current market conditions. And same thing when you're trying to go long. If the volume is very crowded, it's very good for long. So that's pretty much all of the content today. If you want the list of the coronavirus stocks that happened in the last 3 months, and you also want the template for tracking statistics, make sure to sign up the email below, and we'll be giving out the template and the list within a month. So thank you very much for watching, and I will see you guys in the next one.